We are closing out the year in 2023. What exactly happened this year with rates, with prices, all on today's Real Talk. Today, we have my dad, Drew. Thanks for coming on.
Thanks for having me.
So we're closing out the year. We're in November now. What exactly has happened this year? There are a couple misconceptions with what prices have done and even with what interest rates have done when we're talking to consumers. What do you think is the story on average price for 2023 so far?
Okay, prices. I think that there are a lot of misunderstandings about what happened with price. So price, if you look at category by category, prices no doubt have been declining.
Yeah.
But the challenge is that if you look at if you look at statistics rather that the board often produces, you will hear that average prices have actually gone up. So one that's popularly taunted or flouted is that prices have gone up something like 1% from last
Very
September
marginal. Yeah.
to this September. However, what they're doing is they're taking the average of everything that has sold and you end up with a 1% price increase. The challenge is that the mix of what has sold has actually changed considerably. So there are many less pre-construction and many less condos that have sold because there just isn't the market appetite for those products anymore, and they typically sell in the lower end. So when they sell, they would naturally bring the average price down. And so if you look at a particular category, like if you were to look at 4-bedroom, 2-story homes, for example, in a given area in Hamilton, Burlington, you will find that they have probably dropped on the order of, well, between 10 and 30%.
For sure.
Depending upon what area you're at.
Yeah, that average price statistic is the go-to for people when they're trying to figure out what's going on in the market, but is easily the most deceiving thing. And many sellers are clinging on to the fact that, hey, well, I looked on House Sigma or this site or that site, and the average price has actually gone up a little bit, so we should be okay compared to last year.
Exactly.
But if you look a little bit deeper, not much deeper, it's often not the case.
Very definitely, yeah.
So we've had a series of rate hikes, but the last 2 announcements have been holds.
Yeah.
Have we seen any change in the market since those 2 holds?
I think what you're seeing is that the buying public is still on the sidelines waiting to see if there's a definitive direction for rates, or waiting to see at least whether rates have in fact plateaued. Now, this is changing by the day.
Absolutely.
So yesterday in the States, there were very favorable inflation numbers. And there seems to be, the body of experts seem to be siding with, there seems to be a consensus that interest rates are going to hold, and in fact that interest rates in the States are going to fall.
Yeah.
David Rosenberg came out this morning saying that he thought that there was a 1 in 3 chance that interest rates in the U.S. could fall by 1/3. Now there's a 1 in 3 chance that they could fall in March.
Yeah.
Sorry,
Okay.
not by 1/3. Wouldn't that be nice if that happened? So I think that what's going to happen here is consumers are going to start to hear the media reports about the anticipated rate drops, and that should have a positive impact on prices. That is that prices should start to recover and maybe even rally in the market.
Well, you're starting to see a lot of buzz, certainly from the mortgage world, calls for these rate drops hopefully coming next year. And I think there's also a misconception with what the rates have done this year. Just going back to the first thing with misconceptions, they didn't move much this year in terms of the 5-year fixed. Like it went from about an average of 6.49 up to about 6.84. Like it wasn't a monstrous change. What everybody was looking at was the announcements, but that was the bank rate, not the actual mortgage rate.
That's right. So there are factors other than the central bank rate that impact on 5-year rates. Nonetheless, those are pretty high rates for consumers.
Yeah.
Especially coming off of becoming accustomed to much lower rates. So there's a couple of variables there. There is the rate itself, but there's the anticipated rate.
Yeah.
And I think if you get into this climate where people are expecting rates to come down, they're going to be expecting prices to go up, and they're going to start to act. And that's that's, I think, the next thing you're going to see in the market.
Yeah, things softened and slowed down so much because buyers were concerned if I buy this house today and by the time I move in, the rates have gone up, my property value will likely drop as inversely to the rate going up.
You're
By the
right.
time I move in.
You're right. And it could be that kind of thinking is unwinding or reversing. And if that's so, it's going to have a market impact on prices and probably volume.
So all this being said, things are changing day by day by day. What are we telling sellers right now who are planning on listing in the spring market?
Well, these things are changing week by week. So you have to have information about what the direction of rates is, because it's changing week by week, almost day by day. So a month ago, it looked like rates were going to rise through the middle of next year.
Yeah.
Now it looks like there's a 50-50 chance, or as Rosenberg says, a 1 in 3 chance that rates will fall early in the year. Now, next week, there could be some exogenous impact that will change that sentiment. So you really have to talk to an advisor. You really have to get up to the minute, certainly up to the day information. And it also depends a little bit on your own individual plans, whether you have a short time horizon or a long time horizon, how you're going to act or what would be most advantageous timing-wise for you to act.
Perfect. Lots of great information. Thanks for coming on.
Thanks for having me.